Good set of numbers. The numbers came out yesterday and it's been a good set for them. We've got Mr. Bhaskar Subramanian, the MD and CEO and co-founder at Amagi Media Labs, joining us on the show to try and decode what the numbers look like in the first quarter and, more importantly, what's the outlook ahead. Mr. Subramanian, let's start by talking about your adjusted EBITDA margin, because while on that front we've seen an expansion to 11.5%, your gross margin has declined due to the mixed customer arrangements as well as AI investments. Now, as AI and new products scale up, should we expect gross margins to recover as well?
So fundamentally, if you look at it, saying gross margin is a much more complex sort of a beast for us as a company. And because it impacts, AI is a very, very small portion of that. But largely, it's also about some of the corrections of the past. If you look at it, if you remember 3 quarters back, we did announce about a customer that we actually did a long-term deal with a customer. And so those are some of the tail effects that you're seeing as part of the gross margin as you see it. Having said that, we're quite comfortable in terms of being able to improve it. In fact, we've been discussing about all the cost savings that we're doing internally, and roughly almost $300,000 of cost savings that we did this quarter as well. So we continue to see that as a trend line from a 67 to 69%. That I think we're comfortable where it is today, including eventually the AI investments we're making as well.
Understood. And Mr. Subramanian, you've won several large orders and deals across the US, Middle East and Asia Pacific in the first quarter. By when do you expect these wins to start contributing meaningfully to the revenue?
So typically from us, for us, if you look at it, there are 2 parts, right? If you look at the cloud modernization journeys, typical customer win to a typical revenue is about a 6-month cycle from an onboarding standpoint. And this is, I'm talking about on an average, not specific to a particular deal, but some of these deals have much longer tail. If it's a large transformation of really for example, we have one US broadcasters where we're transforming their complete whole news operations, for example. That takes typically anywhere from 12 to 18 months of transition, that time it takes, for example. But the beauty of these businesses is that these are very long-standing contracts from 3 to 5 years typically. And that drives the more predictability from a business standpoint for us as well.
Understood. Also, Mr. Subramanian, in the shareholder letter, you said that 95% of your revenue is non-INR and that a 10% INR to USD movement can impact your EBITDA margin by around 1.5 percentage points. On the back of everything that we're seeing playing out geopolitically, what's the outlook on the underlying margin trajectory, excluding currency? And when it comes to currency, do you see a need to increase hedging as your business scales?
I do not think we are looking for hedging. We did explore possibilities, but I don't think at this point in time, it's not a material impact that we anticipate at this point in time as the business grows. But we'll continue to be monitoring it, given all the fluctuations we're seeing from a currency standpoint. But today, we are not taking any actions, at least in the coming quarter. And we'll keep the streets updated as we see any sort of changes in that particular posture. Today, we don't see any sort of change in that perspective.
Understood. And you are also evaluating 33 M&A opportunities and you're actively looking at 10 opportunities from what I understand. Can you give us an update on that front? How are things shaping up and how will your internal cash balance, would that be enough for any M&A that you are looking to do, or are you looking at raising cash for this purpose?
I don't think it's slightly early today. I don't think we might need additional cash in the context of the businesses that the 10 opportunities that we're evaluating today. I don't think we are expecting extra cash for that particular 10. Having said that, it's slightly early in terms of the evaluation cycles. We are building conviction internally. We've always been a very conservative sort of a management team in taking decisions on M&A because we want it to be much more of a value M&A for us, both in terms of revenue accretion as well as specific blocks where we feel that we can actually kind of accelerate the innovations that we could potentially do. So to that extent, we kind of continuing that progression, and the whole last 3 quarters, that's the span time we've been spending with these companies to understand it better. And you've seen that we've been having organic growth, which is something that we don't want to slow down our organic growth because of any sort of inorganic spends that we do. So that's been the careful state in which we are kind of lens through which we're actually looking at all our acquisitions today.
Okay, and lastly, Mr. Subramanian, the top 10 customers now contribute to roughly 41% of your revenue, while the growth is increasingly coming from expansion within existing accounts like you were just talking to us about. How do you see customer concentration evolving as these relationships deepen, and what's the visibility on new customers?
Two parts, right? If you look at it, I think first we are very comfortable with the customer concentration of about 35 to 40%, right? So we are in that particular zip code. We are comfortable with that. Why is that? If you look at it, because we are in a B2B business where enterprises are our core staple customers, right? Large enterprises. To that extent, we also need customers to meaningfully commit in terms of the volumes that they're going to be spending and the share of the wallet of theirs fundamentally. So having hundreds of customers with less than $1 million each, it doesn't make sense in this particular business. So to that extent, we want top 10 to have a good contribution for our revenue business. So to that extent, we're very comfortable with what we see today. Having said that, we are getting multiple multi-million-dollar deals starting to come in, which obviously will start to inch up and scale as well. So the health of the business, and I'm sure if you look at it, last quarter, we did announce the number of $1 million plus customers that we do. That's a KPI we track on an annual basis. And we see that as a healthy trend that's going across this year as well.
Okay, understood. And on that note, Mr. Subramanian, thank you so much for your time. Congratulations on the quarter and good luck for the quarters to come.